The average interest rates in the money markets have continued coming down, and currently the average settled at 14.5%. However, the top 5 money market funds are continued with their resilience, and they're giving us averagely higher rate than the average money market rate at around 16%. That translates to about 13.87% net return after considering the 15% withholding tax. On the other side, in the bond market, the average market rate has continued with its declining trend and has hit a low of 11.75%. That has pulled down with it other reasonable returns from other investment vehicles, and the key worry by many investors is where else can they invest their funds to cushion against the declining market interest rates. The market is on a how to adjust mode from stability to stability state, and when the markets are unstable, most investors hold short-term instruments, and that's why in the recent Treasury investments there has been a lot of oversubscriptions in the one-year Treasury bill, which has continued pulling down the interest rates due to the high demand. When the markets turn to be a bit stable, most investors will push their investment for size from the money market towards the fixed income instruments, and that's the reason why we'll be witnessing a considerable resilience with the fixed income funds compared with the money market funds. But for those who are enjoying the returns in the top 5 money market funds, those competitive returns are bound to continue reasonably because the average returns on the Treasury bills are a bit stable within 2024 and compared to the average rate that we witnessed in 2023 end. Today, the CBK opens the January 2025 bond auction and offering 2 reopened bonds, that is FXD1 2022-25 at a coupon of 14.188% and FXD1 2018-15 at a coupon rate of 12.65%. And we'll be looking at the specific details of the FXD1 2022-25 after 3 seconds short break, so don't go away. In the meantime, don't forget to give a like to this video and engage us in the comment section. And also, you can share this video to another person if you find value. See you after 3 seconds short break. Welcome back to the details of FXD1 2022-25. This bond was first issued in the year 2022 for a total maturity period of 25 years, and that means that this bond is supposed to mature for redemption on 23rd September 2047. For those who are investing in the reopened auction January 2025, that means that they will be investing in the remainder of the maturity period, which sums to 22.8 years of a coupon of 14.188%, which will be paid in the months of April and October each year. The second thing that is very important to look at is the coupon and the tax rates. This coupon of 14.188% will attract a tax or a withholding tax of 10%. And the reason is that this is a bond with a maturity period of 10 years and above, and such bonds do attract a lower tax of 10%, giving you a saving of 5% on the usual or ordinary withholding tax of 15%. That consequently means this bond will give you a net return of 12.77%. Compared with the money markets, where the average return on the money markets is at 14.5%, but we have the top 5 money market funds that have continued their resilience, and they are giving an average of about 16% with a withholding tax of 15%, realizing a net return of 13.87%, and that is almost equal to what this bond will be giving you as a net return. And therefore, with the declining market interest rates, which automatically will continue pushing down the net returns that we'll be expecting from those bonds, then these bonds gives a good way to cushion against those declining interest rates or returns by locking in part of your investment in this particular bond, the FXD1 2022-25. During the auction, this bond attracting a coupon of 14.188% compared with the current market interest rate, which stands at 11.7572%, and corresponding to the current inflation rate of 2.8%. When the coupon rate is higher to the prevailing or compared to the prevailing market interest rate, then we expect the bond to attract, or the auction to attract a higher demand, and for that reason then we expect this bond to attract a premium in its purchase, meaning that we'll be paying a clean price that is slightly above the prevailing or above the par price of 100 shillings. So this means that this bond automatically is supposed to attract a premium during the auction. Above that, then we have to determine the price, the expected price that we are going to be paying during the auction, and therefore the price that you get from the auction, we get the clean price, then we add to it the accrued interest. This bond pays its coupons in April and October, and therefore the latest interest payment or coupon payment happened in October 2024, and the value date of this auction or this bond being 20th January 2025, then it means there is accrued interest from October up to the value date of this bond, that is January 2025, of averagely about 4 months, and that translates to 3.5470 for every 100. That interest rate or the accrued interest rate will be paid together with the clean price out of the auction to give us a dirty price, and therefore consequently this bond will be paying an average of about 103 shillings to every 100 during our payment after the auction. The bidding period, which we also call the selling period, this period will range from 13th December of 2024 to 15th January 2025. So we have quite a long period to organize for the bidding period, and during this time you are able to open your CSD account if you do not have one, or organize your Treasury Mobile Direct documentation, because this auction will only apply to those holding CBK CSD accounts, and the bidding will purely be electronic through the CSD account and the Treasury Mobile Direct. During that period, once we have placed our bids on Wednesday 15th January 2025, that is when the bids close, and when the bids close, the same day is the auction day. So we'll be able to get our results out of those bidding or the auction on 15th January 2025, on which day also we can start arranging payments for the bond. On Friday 17th January 2025, that is when the results will be relayed as per the prospectus. But considering the recent developments in the CSD platform, we get these results, payment details, immediately after the auction. And therefore, by Monday, the 20th January 2025, which will be the value date, will have enough time to organize for that payment from the Friday of 17th, or better from 15th January, when the auction will be over and the results relayed. Then we exhaust or comply with the payment for that successful bond, by Monday 20th January 2025. Something that is very important worth noting, because I've seen it affect several guys in the previous November auction, is that when you have your successful bid and you have been given the payment details, defaulting or failure to transmit or wire RTGS that payment, may CBK may suspend you from future bond auctions. That is relative, because may does not mean that failure to pay you get an automatic disqualification. On the value date, that is 20th January 2025, that is the same day when those instruments will be transited to the secondary market for trading. Lastly but not the least, we have the second bond, that is the FXD1 2018-15, which is also part of the January 2025 auction at an coupon rate of 12.65%. We have analyzed that bond on this video, so don't fail to watch the next video to get the details for that particular bond. Thank you for watching.